What did Raphael Bostic, Fed president, say about rate cuts? What's going on with regional banks? And what is really going on in commercial real estate? We have an example. Folks, Fed President Raphael Bostic on Friday, I read it on Saturday, basically said no rate cuts until late 2024. Also said that rates are sufficiently restrictive. Folks, I don't know if you've done the math, but we are up about 75 basis points since the last Fed meeting in the 10-year note. The bond vigilantes are out in force, and there's no chance that the Fed raises rates November 1st. They're basically going to say something like the market is doing the job for us. We do not need to pile on. But that doesn't mean they're going to cut, but it does mean that they will pause in November 1st, in my opinion. We are also getting a better insight into the regional banks. We have a lot of regional banks reporting on Monday, but we're seeing things like regional financial interest income decline 6.5%, and forecasting a 5% decline in Q4. Banks are simply paying higher interest rates to keep capital, right, and to stop capital flight. This is not only region financial. We got Comerica issued similar warnings of 5 to 6% drop in interest income. Fifth Third Bank, same thing. Folks, the regional banks are in trouble. And we're going to increasingly see stress in the system as rates go higher, values, the bond portfolios go down, and we're going to see some forced marriages, in my opinion. Dropbox. Dude, Dropbox is handing back 25% of their leased space in San Francisco. They're not doing this for free, folks. They are paying a $79 million termination fee. They're basically saying it is not worth keeping this 25% or 165,000 square feet. We're going to pay you $79 million to let us out of the lease. That is one heck of a breakup fee. GM and Ford appear to be offering currently a 23% pay raise over 4 years, but the union believes there is more to get. How about San Francisco apartment building, Crescent Heights? Check out some of these numbers. Crescent Heights was sold in 2018. I'm just going to round the numbers for $544 million. Not bad, $544 million. It was just revalued at $279 million. It is down 48%. Now, folks, let's do some math, and I'm just going to make some assumptions. In 2018, I'm going to assume you got a 70% LTV, which means you borrowed 70%, you put 30% down or 30% equity. That means you borrowed $380 million. Okay, great. Now, if you want to go back in this environment, you're not going to get a 70% loan. You might get 65. So if you take the 279 million times 65, your new loan will be 181. So what does that mean? That means this building is going back to the bank, because the operators, the owners, would have to cut a check for $200 million to keep the building. $200 million. $200 million. They're going to say, I'm guessing, no thanks, take the building back. And this, unfortunately, will go down as a foreclosure. It will be resold. The property taxes will be assessed lower. Will be a huge property tax hit, because, again, the building selling at $543 million is very different than a property selling at $280 million. The tax will be cut in half, which will impact San Francisco's services, because, again, the tax revenue is used to pay for services, and the doom loop continues. Taylor from Life Goal Investments says that we are entering the chop bucket. The VIX just exceeded 20. I did not check it this morning, but again, with the VIX over 20, Powell saying the economy is strong, the 10-year note at 5%, multiple wars, a government that's not really functioning without a House Speaker. Very, very interesting. Don't know if you've taken time to look at it, but it looks like Bitcoin is over 30,000. Could Bitcoin go down as the best investment of 2023? I think it's up like 90% or something. Pretty interesting. Discover Financial. They raised their credit reserve 601 million. Credit quality is deteriorating. Charge-offs now are at 4%. They were at 2.8. They need to watch the delinquency rates and the like. So again, lots and lots of things going on. We have more and more people talking about housing, late 70s, early 80s. We brought you that here first, well over a year ago. Fortune is now writing, housing winter arrives early. The Great Recession level transactions. Existing home sales to fall 15% year on year, lowest in 13 years. This is not 2008 or 2010, but it is the 1980s. Back to the future. I think that's really funny that Fortune said that when Ty and I just did a Back to the Future video on housing. Before this article was written, I will have you know. What they're seeing now is look at 1978 to 1982. I've asked you to look at that as well. Transactions fell 50%. Sellers were not motivated to sell in mass, unlike the Great Recession. So folks in the 80s fought to stay in their home, where in the late 2010, they were easily walking away because they had other options. I know the crash bros and the doomers want you to believe it's all falling apart. Transactions certainly are, but not price. So there you have it, folks. Have a wonderful day. Take care. Bye.